All right, so if you've had any interest to learn about the infinite banking concept or figuring out how to structure life insurance policies for cash value, give this video a watch because I'm going to break down exactly how to do it. If you're new here, my name is Nolan Sanborn. I've been doing infinite banking and being an infinite banking practitioner for just over 3 years now. I got my first policy back in 2019, and now we teach people how to couple commercial real estate investing with infinite banking. So number one, I want to be very crystal clear here. Infinite banking is not describing a life insurance policy. It's describing a behavior. It means when you take out money from an account, whether that is in your checking account or maybe money in a shoebox underneath your bed, when you go and fill that bucket back up with cash, you're charging yourself the market rate of interest because there's a cost to everything. It doesn't matter. You finance everything that you do. You either borrow someone else's money and pay them back with interest, or you spend cash and then you give up the ability to earn interest that you would have otherwise been able to earn if it was in that account. So describing that and understanding that infinite banking is separate than how a policy works, let's just break down actually what it looks like when we're doing an infinite banking policy. So first, there's a lot of numbers on this screen, but I really want to focus on these highlighted columns, okay? So you can see here, this is not a policy built for cash value. What I want you to look at here is this column of cash value or cash outlay and cash value. Your cash outlay are your deposits. If you notice up here, if you're making a $100,000 deposit, now this could be 100,000, it could be a million, it could be 10,000. It doesn't matter. The ratios are going to be the same. But in this policy that is structured for death benefit, not cash value, you can see this thing called a PUA. It's a paid up addition. It's basically money going immediately to cash value and the ability to borrow it out. So in this very first column, you see you deposited $100,000. The cash value is $500, but you got $5.4 million of death benefit. Now, this is a guy named Johnny Appleseed. He's 40 years old in preferred health, right? Just a typical run-of-the-mill person. So you can see here, though, after these 10 years of him making $100,000 deposits, his cash value is only $885,000. He's still behind. He actually looks like it doesn't even break even until about year 12. So it takes a little bit of time if you're not to even break even if you're not structuring it properly. So even going down a little bit further, he starts to catch up some speed, and then it starts to build a little bit later. But at the end of the day, this policy is not built for cash value accumulation and the policy loan capability. It's built for the insurance company to take on massive risk by having this death benefit so large, okay? Just to be clear, that is not the way to do it. That is not the infinite banking route. Candidly, that's based upon the best day for the agent ever because he's going to earn a fat commission. Let me show you how to minimize my commission down to the IRS minimum and pump this baby full of cash, okay? Now, this is the same guy, Johnny Appleseed, okay? Cash value, the deposits are the same. But I want you to look up here, again, $100,000 deposits. What we did in this policy instead was we reduced the death benefit down to the IRS minimum, pumped the cash value up to the IRS maximum, and it's always going to be that 60-40 ratio. There's a lot of noise out there saying you can do it other ways. This is mathematically and candidly tax most efficient way that you can build these policies. But you can see cash outlay, the same deposits, $1 million over 10 years. And then year one, he has almost $62,000 of cash value compared to the other policy that had like $500. So you can see, though, he doesn't have $5.4 million of death benefit. He has $2.3 million, which is still a pretty good number. And how you're going to see he's going to break even a lot sooner in about year 7 and 8-ish, again, depending upon his age and health. But he's already beaten ahead. He's ahead of this thing, and it's just going to keep cranking, and it's going to go on forever. He cannot outlive this. This policy is permanent. But most importantly, when you're looking for an advisor or a life insurance agent to try and implement these life insurance policies, make sure that you're talking with somebody that is helping you being able to implement policy loans. Because realistically, a life insurance policy is not going to make you rich. Nobody's going to say that, oh, I'd rather put it in here versus a real estate or a business that you own and develop. What idiot would ever tell somebody, if you're a business owner and you said, I've got $100,000, and he was to tell you, oh, I can get a better return on it in the stock market than you could in your own investing in your own business. That's so self-centered, and candidly, bad information and bad advice. What we're trying to show you with this infinite banking strategy is to, instead of using your own cash, use the life insurance policy, taking cash value or taking policy loans to deploy into your business, because you're going to have more capacity to invest in your businesses, in those real estate opportunities that you would have otherwise not received because you got money in a taxable checking account that's collecting dust and ruin into inflation. So again, the policy is not going to make you rich. It's not about the policy. You do got to structure it the right way, which is exactly what we're doing. The 60-40 ratio, which is right underneath the MEC line or that tax line. And we build these things as efficient as we possibly can. So if you have interest to learn how this policy, what would look like on you, you want to learn about infinite banking and how to take policy loans, invest it in real estate, invest it in your business, click the link below my bio to schedule a call. I'll see you on the other side.